This video is the private fortress, a 5-layer blueprint to lawsuit-proof $1 to $20 million. And yes, the thumbnail says 5 layers equals untouchable, and that is exactly what we're building. If you have between $1 and $20 million in net worth, the game you're playing is different. One bad lawsuit can erase a decade of work fast. In the next few minutes, I'm going to show you a 5-layer legal system used by the truly protected, a structure, title, liens, jurisdictions, and triggers. Each layer stands alone, but when combined, they make you look unprofitable to predators and unbreakable in court. So stick with me, because layer number 4 is where most people fail, and layer 5 is the move that quietly wins negotiations before they begin. Here's a quick intro, then right back to the tactics. I'm Kevin, the business guy, the CEO of the Lawyers Limited Law Firm and Asset Protection Planners. I've been in asset protection for 34 years and nearly 30 years. We've been setting up Cook Islands trusts more than any firm in the world. And if you like clear legal step-by-step protection, subscribe now. And when you're ready, head to assetprotectionplanners.com. You get a whole lot of free information there. Now let's go ahead and build your fortress. Now here's the uncomfortable truth. The moment your net worth crosses 7 figures, your name lands on search lists for contingency fee attorneys. They run public databases, look for equity in homes, LLCs with assets, and bank balances that look tasty. Plaintiffs don't need to prove you did anything wrong to force a brutal settlement. They just need to make your risk management look more expensive than paying them to go away. So here's a legal way that I'll give you to make your balance sheet look unattractive without hiding a dollar and without lying. Now I'll show it, but first we need to fix the foundation. Okay, definition: clean structure is the legal wrapper around how you earn, hold, and move money. The goal is separation, not secrecy. Tactic A: use a privacy-friendly holding LLC, commonly in Wyoming, we set up thousands of them, to own your operating companies and membership interests. Why? Manager-managed structures and charging order protection can force a creditor to wait and sometimes receive nothing but a tax bill on phantom income. Tactic B: title risk separately from cash flow. So don't let your operating business also own significant assets. Your operating company is the lawsuit magnet, so keep it clean. Ownership and money should root upward to a safer entity. Tactic C: document discipline. Clean contracts, vendor agreements, and employment files are boring until discovery week. Messy books are exhibit A for piercing the veil. So we train clients to run a corporate minute once a quarter. It takes 10 minutes and saves 10 years of pain. Case study composite. Mark, an e-commerce founder with a $4.5 million net worth, he had one LLC doing everything: inventory, payroll, customer service. A product claim hit, and before we met, plaintiff's counsel saw $1.2 million of cash sitting in the same LLC. After restructuring, holding company on top, operating company lien, cash upstream, settlement posture flipped. They settled for nuisance value because the prize vanished from the operating entity. Definition: title is simply the name on the deed, the account, or the registration. The name on title decides who the world can sue for it. Real estate: we often place each property into a separate land trust with an LLC as the beneficiary. Public records show the trustee, not you. We often set up the trustee as a Wyoming LLC with nominee managers, so your name stays out of the public records, and a virtual office address. Now, the beneficial interest in that land trust could be owned by another LLC. It can be transferred or liened without recording a deed. Smooth, quiet, and legal. Operating assets: vehicles, equipment, trademarks. House them in an asset holding LLC. So you operate, you have your risk, you operate your business over here, but a separate LLC holds your stuff that this business that has the liability uses. It pays lease payments over here, so when this gets sued, there's really little to nothing to take. So the operating company gets sued, plaintiffs can't just scoop the assets. Bank and brokerage: Keep personal investment accounts in a dedicated insulated LLC, separate from your operating world. Simpler audits, cleaner firewall. Okay, cliffhanger number 2, you can title something so a predator thinks you don't own it, while you still control it daily. So we open that door when we hit layer number 4. Now here's that unattractive balance sheet I promised. Plaintiffs don't chase broke people, so we make equity look encumbered, not fake, not fraudulent, encumbered. Internal equity stripping. So your holding company or finance LLC records secured promissory notes against your high equity assets, properly documented, commercially reasonable, and recorded where appropriate. File UCC1 financing statements on movable assets. The world sees liens. Plaintiffs see a thin slice of equity and move on for easier prey. Third-party seasoning. If a case escalates, we can engage independent arm's-length lenders to purchase those notes, and the proceeds go into your protected structures account. Now, it's not just a related party. It's a paper trail. It's real money owed to a real lender. Here's a case study composite. Daniel owns 8 rentals, like a buffet. We layered internal liens at fair interest, then had a third party acquire 2 notes pre-litigation. Public records now showed the properties with little reachable equity. Demand letters lost their teeth. Important timing note, you must do this before trouble, or at least very early, with competent counsel. So you're aligned with fraudulent transfer laws, you do this early. Strategy is legal. Timing is everything. Okay, now layer number 4. Choose the right legal battlefields. Cook Islands Trust, Cook Islands LLC. And this is the layer where most people fail. They keep everything domestic and hope state exemptions save them. But high exposure people need a jurisdiction engineered for asset protection litigation. And that's where the Cook Islands comes in. Definition: a Cook Islands Asset Protection Trust is an irrevocable trust formed under Cook Islands law. It is administered by a licensed bonded trustee company law firm in the Cook Islands. The law forces creditors to fight in the Cook Islands under Cook Islands rules with a short limitation period and high burdens of proof. Like I said, we've set up more of these trusts than anybody in the world, and I've been doing this for 34 years, 30 of them setting up Cook Islands Trust. Now, our standard build looks like this. The trust owns a Cook Islands LLC. Why? Because day to day, you serve as the manager of that LLC. You can bank in stable jurisdictions, invest, and operate normally. So nothing changes in your daily life. The switch: when a serious lawsuit hits you, our trustee company law firm, who is independent and bonded, temporarily steps in to protect you. That means they can replace you as manager of the LLC that's inside the trust, move funds if needed, and say no to a U.S. judge who demands assets. So you're compliant because you do not have legal control at that moment. Keep in mind, if people are concerned, oh, I don't know these people, I don't know if I can trust them. Well, keep in mind, I've been doing this for 30 years. We've never seen anything but impeccable integrity and honesty with our trustee company personnel. And keep in mind that, however, every single day of the week the courts are open, they seize assets every single day of the week. So would you rather have a licensed bonded trustee company law firm in the most trusted trust jurisdiction in the world stand guard over your assets and do the right thing, or would you rather have a 100% chance of the courts taking everything that you have? I think we both know the answer. So the key thing is get familiar, and so you can develop the trust and comfort knowing that your asset's going to be safe and secure. Now, when the storm passes, control can return to you. Experience matters. In fact, like I said, I've been building Cook Islands Trust for nearly 30 years, and our organization, as I said, has set up more of these than any firm in the world. And the difference isn't just documents. It's the choreography when heat arrives, because it's something we've done again and again and again. It's like hiring the best brain surgeon, hiring the best heart surgeon. We're the largest asset protection company nationally, and you know that when we do it, it's going to be done properly. Cliffhanger number 3. Here's a hybrid, a trigger trust. Now, this twist gives you domestic convenience with offshore teeth, and I'll show you in the next chapter. Okay, now layer 5, the trigger trust. Hybrid onshore to offshore defense. Now here's the move sophisticated families love. We set up your trust with a domestic-facing administration while waters are calm. So you enjoy easy banking, tax reporting, and day-to-day control through your LLC. Then, when a lawsuit or creditor threat crosses a line, a prearranged trigger lets the offshore trustee decide to take over the reins, and they can do that fast. Here's some example of triggers. A court orders turnover, a receiver is appointed, a charging order lands, or a settlement demand exceeds the threshold that you choose. Now, the trustee has to make a decision, so it can't be an automatic thing. The trustee will take action when they see these things hit. So when a trigger fires and the trustee makes that decision to stand in to protect you, the trust administration shifts to the Cook Islands without needing your permission in that moment. So that's the key. You can't be held in contempt for assets that you don't control. Here's why it works. U.S. judges can command U.S. persons. They cannot order a foreign trustee outside U.S. jurisdiction to move assets. The trustee follows the trust deed and Cook Islands law, not local outrage. It's lawful, it's tested, and it's the backstop that lets all earlier layers do their job. Case study. A surgeon faced a stacked malpractice case and an aggressive plaintiff. Post-insurance. Our trigger fired when a court considered appointing a receiver. The trustee decided to step in, banking diversified abroad. At that point, negotiations shifted from hand over everything to what insurance number ends this. It ended quietly. Okay, so let's keep this clean and simple. Taxes. It's not a tax evasion plan. Properly structured, the trust is typically tax neutral. For U.S. persons, you report income as required. Your CPA keeps doing your returns. Asset protection is about judgment resistance, not tax schemes. Timing. The best day to set this up was before the threat. The second best is before a judge issues orders. We regularly help mid-litigation, but the earlier your moves, the stronger they stand. So always consult counsel about fraudulent transfer look-back periods and solvency tests. Now, ethics. We protect good people from unfair outcomes, not wrongdoers from justice. The law gives you the right to arrange your affairs in advance, so exercise it. Okay, so let's talk about your operating company. Your operating company is where the sparks can really fly. 3 practical moves. Payroll. Use a PEO or a separate payroll company to isolate wage claims and employment drama from your core entity. This keeps the nasty surprises out of your main vessel. Contracts. Add attorney's fees provisions and venue clauses favoring your state. It doesn't stop a suit, but it changes the math for the person thinking about suing. Vendor firewalls. License your trademarks and software from an IP holding LLC. The operating company can die and be reborn. Your brand should live on a higher hill. Okay, let's talk about real estate. Now, insurance is necessary, but it's not a strategy. Plaintiffs' attorneys know policy limits like they know their coffee order. Your goal is to be unappetizing above the policy. Here's the moveset. Title each property into a land trust with a dedicated LLC beneficiary. Record commercially reasonable mortgages to strip excess equity. Now consider a master lease to the operating entity if you need control. Keep beneficial ownership insulated. Now for domestic planning, use charging orders. Strong states for your LLCs. Okay, cliffhanger number 4, and everybody asks this, do I lose control if I do this? Short answer, no. You build it right. The trust plus LLC design is control when calm and protection when stormy. So I'll pull back the curtain next. Okay, so let's demystify the day-to-day. 99% of the time, you're the manager of the Cook Islands LLC owned by your trust. You log in, you invest, you pay bills, normal life. There's no secret phone line to a volcano lair. But you don't hold the nuclear codes. If a court tries to force a turnover, our bonded trustee company and law firm, whose entire mandate is to protect the trust, steps in. They can vote managers, they can move accounts, and shield assets per the trust deed and the Cook Islands law. That shift is the legal distinction between I can comply and I physically cannot, Your Honor. Judges understand impossibility, and that's why this works. Okay, so now let's talk priorities for those with $1 to $20 million plus in net worth. No matter where you fall on that spectrum, the principles are the same. Separate, encumber, and insulate. Around the first million, start building a solid foundation, insurance, an LLC too for your operations, and clean titling for real estate. But even here, an offshore trust can be the umbrella that protects your future growth. And you don't have to wait until you're rich enough. You insure your house before it burns. Same logic applies. Okay, $2 to $5 million. Begin layering strength, equity stripping on real estate, separating intellectual property and banking through a holding LLC. Now at this stage, a Cook Islands Trust or Belize Trust is smart, not extravagant. It internationalizes your firewall before the first serious lawsuit ever arrives. Okay, $5 to $20 million. Now you're in the visibility zone. Implement the full offshore structure. A trust with its own LLC, pre-written triggers, and third-party lien seasoning. This is where protection and control reach equilibrium. Your wealth can operate efficiently while remaining lawsuit resistant. Okay, over $20 million. At this level, think like an institution. Add trustee-approved investment policies, multi-bank diversification, and secondary jurisdiction layers or global balance. You're protecting not just assets, but legacy, leverage, and reputation. Budgeting reality. Comprehensive offshore structures cost real money to establish and maintain. But compare that to one seven-figure judgment, one disgruntled ex-partner, or one catastrophic malpractice, or a divorce for that matter. Asset protection isn't an expense. It's a deduction you pay before disaster, not after. So don't measure cost. Measure risk deduction per dollar. Okay, so here are the 3 moments that you'll be glad you did this. Moment number 1, the lawsuit with headlines. You'll sleep because your assets aren't in the blast zone. Moment number 2, the surprise creditor. A personal guarantee boomerangs. The balance sheet looks leaned and the fight stalls. Moment number 3, the family week you didn't plan for. You need to focus on people, not paperwork. The trust team carries the defense posture quietly. Okay, so here's our choreography step by step. Diagnostic. We map entities, titles, equity liabilities, and exposure lines. Blueprint. We recommend the 5-layer build that fits your goals and risks. Formation. Trust deed in the Cook Islands LLC inside of it, holding LLC, real estate titling. Banking. We open compliant accounts for the LLC with trustee oversight when needed. Liens. We draft, record, and if needed, source third-party buyers for notes, and we put the proceeds into your offshore trust. Playbooks. We write your trigger criteria and response plan in plain English. Maintenance. Annual reviews, updates, and training for your staff or family office. Now, we've done this thousands of times across 3 decades. The playbook is tight because the stakes are high. So if you're the profile we're talking to, business owner, real estate, 7-figure net worth, schedule a confidential consultation at assetprotectionplanners.com or just go there to get free information. You can learn, then decide. Okay, cliffhanger number 1, make your balance sheet unattractive. Use equity stripping with real notes and UCC1s. Set up before trouble. Cliffhanger number 2, title so you don't just seem to own it. Use land trust with LLC beneficiaries and IP holding entity. Cliffhanger number 3, the hybrid twist. Pre-arranged triggers in your trust deed to shift administration offshore when needed, when the trustee decides it's too dangerous to leave you as the manager of the LLC. Cliffhanger number 4, control versus protection. Manager managed LLC under your trust gives you daily control until a legal storm flips the switch. Okay, closing thought and why people call us. If you're still watching, you're serious. You know wealth doesn't need drama, it needs rules. The 5 layers are those rules, so build them while the waters are calm, so when the phone rings with bad news, you already decided how the story ends. I'm Kevin, the business guy, the CEO of the Lawyers Limited law firm, and our brand, Asset Protection Planners. For 34 years, I protected clients from lawsuits, and for nearly 30 years, we built Cook Islands Trust, like I say, more than any firm in the world. So when you're ready to turn knowledge into a real plan, going over to assetprotectionplanners.com, we'll map your risk, show you the options, and if you're a fit, we'll execute with precision. This is the business guy.